Hello, everyone, and welcome to the Cost Smart CFO Alternative, Why Fractional Controller Services Make Sense. Thanks so much for joining us. Uh, I'm going to introduce to you today's presenters. First off, we have our very own Joe Gish, former financial controller with a background in startup operations and supply chain management. Joe spent the last 3 years consulting founders and entrepreneurs on finance and accounting strategies to fuel growth before joining OOTB. At Out of the Box, he connects business leaders with QuickBooks solutions, right-sized accounting teams, and strategic channel partnerships to help them scale effectively. Also joining us today is Natalie Tarrant with both a bachelor's and a master's degree in accounting and a CMA designation. Natalie brings more than 17 years of expertise as a controller, including 6 years serving in fractional roles to her work at Out of the Box. Her career spans diverse industries ranging from biotech and manufacturing to SaaS, construction, and consumer packaged goods, where she has provided financial leadership to drive growth and efficiency. As for me, my name is Jeanette Schwartz-Rattan, and I am the Director of Marketing here at Out of the Box, and I'll be your moderator for the day. Just a few housekeeping items before we get started. The session is being recorded and will be shared with you later today, along with the slide deck, so you don't have to give yourself cramps or carpal tunnels taking all of the notes. You'll be able to review it later. As well, we have reserved a few minutes at the end for Q&A, but if anything comes up that we're covering in real time that you would like to dig a little deeper into, we encourage you to chat your questions to us in the Q&A box below, and we're happy to try and address those as we go through. A little bit about Out of the Box if you haven't joined us before, or maybe it's been a little while. Here at Out of the Box, our mission is to empower entrepreneurs with the QuickBooks-based financial tools, services, and insights they need to thrive. Out of the Box is the premier choice for QuickBooks accounting services, boasting over 30 years of experience and a track record of exceeding the expectations of more than 50,000 satisfied clients. Our comprehensive accounting solutions save you time and money while providing you with the financial accuracy, security, and insights necessary to grow your business. As an elite QuickBooks solution provider, we are able to offer you exclusive discounts and pricing, so please be sure to reach out to us before you purchase any of your QuickBooks solutions. With that, I believe I've covered all of our housekeeping items, so I'm going to pass it off to Natalie to get started. Natalie, go ahead.
Hey everyone, Natalie Tarrant. Okay, so what does it mean and why is there value hiring a controller? So I'm going to try and set the stage to try and answer that question for you. So margins are tighter than ever, meaning that competition is high and costs are up due to inflation. And so my goal is to try and give you visibility into how you combat that and how do you get the data out of your financials that you need to be able to make smart decisions around that. But projects and operations are increasingly complex, and really trying to digest all the moving parts and come up with a game plan that makes sense for your company. Every company is unique, and it's really doing a deep dive and trying to understand what would bring you the most value. And then strategic financial insight, it's just not an option, right? I mean, I don't know how you make decisions for your business without really wrapping your arms around the day-to-day operations and what do you do with that? Where do you go from there? Next slide. So the problem for small and medium businesses, usually there's limited budgets on what you can do, what are your resources, and just trying to figure out how do you get from A to Z. Bookkeeping alone won't provide you with what you need to know. Bookkeeping has value. It is the method to get all your transactions reported. Obviously, that's your leaping off point, and it's not anything that you can avoid doing. And so bookkeepers do provide that value, but then you need to go to the next level. So you need to understand what's your GL really telling you, what's your cash telling you, Is the revenue what you expected it to be? Are your costs higher than you anticipated? And so it's really just wrapping your arms around that and then deciding where you go from there. Next slide. And so now you've got your fractional controller services as an option. So depending on what city you live in this wonderful country of ours, a full-time controller could start you at about 150,000 and they could go up from there. And so fractional controller services gives you the means to have a controller to give you some oversight into your business without it breaking the bank. Some businesses do need a full-time controller, like they are busy Monday through Friday, 8 to 5, but a lot of small to medium businesses can get away with maybe 10 hours a week, maybe 5 hours a week. It's really crafted to what your business looks like. And we do it together. Like we look through your business and we decide what would make the most sense for you to get the most value. Next slide. So what does a fractional controller do? So overseeing financial reporting and analysis. But what does this mean? So after your bank and credit card transactions are recorded, likely by your bookkeeper, then the controller comes in to ensure proper coding and identify any missing expected charges. Is your revenue reflected accurately? Meaning, have you actually earned it? I've seen businesses record the revenue when they make a bank deposit, but this is cash basis accounting, and to be GAAP compliant, which stands for Generally Accepted Accounting Principles, the objective is to have your financials on an accrual basis to tell the better story of how your business is going. In other words, when you actually performed the work and sold your product, not when you were paid for it. Ultimately, are your cost of goods or cost of sales matching your revenue? Month over month, your gross margin should stay relatively flat unless there is specific reason for them to dip or climb. And then that's when an analysis would be performed to understand why there was some sort of change. And in addition, another reason accrual financials are important is if outside financing is needed. A lot of investors and most banks don't want to see cash basis financials. Developing budgets and forecasts. I work with the owners to establish a budget to allow a budget versus actual comparison at the end of each month to understand variances and make adjustments as needed. And also maintaining a 13-week cash forecast to identify any upcoming increases or decreases in cash to allow for better decision making. For example, you can see that it might be challenging to make an upcoming payroll, then you could push harder for customers to pay on time, or you could delay vendor payments. Regarding efficient processes, here I'm looking for bottlenecks and unnecessary complications. What are the current processes that can break down or cause delays? An example is if the business owner is the only bank signer and you're still writing checks, think about using Bill.com, where the owner can still be the one that releases payments, but it removes the obstacle of physically needing to sign checks, mail checks, and keeping check stock on hand. And then strengthening internal controls and compliance. As we all know, fraud is always a potential concern, and processes should be reviewed and constantly monitored. Some history trivia for you. As our 40th president was known to say, trust but verify. Even long-term employees should not be given a long leash. I took a fraud class when I was getting my master's in accounting, and the fraud stories that we had homework assignments from would make your toes curl. I mean, there was clever people with selfish aims. Regarding compliance, making sure you are following IRS guidelines and advising you if your family vacation to Hawaii really should be a business expense or not. Ultimately, that would be a conversation with your CPA, but as your financial controller, I would be obliged to ask you if you use the wrong credit card. Next slide. So this is one example. As a controller where I provided value, one of my clients is a civil engineering firm, and they were wondering where their cash was going. upon review of their direct labor, it was being underutilized. So their payroll would go into two buckets. It would get recorded to the direct wage expense as a cost of sale, which is an offset to revenue, but only for what was actually worked against a job taken from the employee timesheets. Any non-project work would get recorded to indirect wages and the operating expenses as administrative time. So I did a trend analysis to identify month over month what was being recorded to both of these two wage accounts, and the indirect kept climbing, the administrative bucket, and the direct kept dropping, cost of sales. When what that ultimately meant is that they weren't working enough projects, so they weren't bringing in enough revenue to cover the current headcount. Payroll still needed to be processed for the, let's say, 25 people that were on staff, but a lot of it was going to the administrative bucket, which was a sunk cost. So it gave the owners the visibility they needed to see to allow them to start making some necessary decisions.
Okay, so I think we're gonna take a quick pause for a little engagement break. I'm going to launch a quick poll here. We want to know, what is your biggest financial headache right now? Cash flow visibility, slow collections and AR issues, unclear profitability, or too much time fixing the books and thinking about it. We've got about 20% participated. It's climbing to about 40%, so we'll give it about 5 more seconds before we close the poll. 3, 2, 1. And as you can see, it's a pretty even split. So I will pass it off back to Joe so that he can speak to that.
Awesome. Thank you so much, Jeanette. That poll is a pretty good segue into some of the key benefits that Out of the Box is able to provide our clients. And I think one of the most obvious ones is something that Natalie also touched on, which is it's very cost efficient. We're able to provide capability and experience without the overhead of a full-time employee. We can act as plug and play horsepower for your businesses. And when we get that controller in place, we're able to focus on profitability across jobs, across job margins, different products and channels that you might want to sell into. And when I talk with a lot of founders and entrepreneurs, I look at the business as a vehicle and the rear view mirror as what your accountant is. It shows all of the historical information. But if you focus only on that, you have no idea where you're going and you're going to crash. And what controllers operate in is they are the GPS system that allows the driver, which is the business owners and the entrepreneurs, to know how to get to where they want to go. And that's through data-driven decision making. It gives you a lot of confidence to know where your money is and where you should deploy it so you can make some good decisions around how to plan and scale your growth. And controllers take all of that information from the accountants and the bookkeepers, which is absolutely critical to this entire thing, but they turn it into a tool that you can actually leverage. Next slide, please. So why Out of the Box? I think we've been in this for over 30 years, and we've got experience that entire time in providing bookkeeping and accounting services for our clients. We learned pretty quickly that entrepreneurs and business owners are just incredible creators and builders and operators, but they're just not typically very great at accounting. And so when we were selling into QuickBooks, we learned that and started offering that level of support. And we've been offering that level of support pretty much since year one. We have that proven infrastructure and support for small to medium-sized businesses. We've learned over those 30 years that a lot of our clients actually outgrew us. So we started adding controllers. So we have this extra level and this extra gear that we can provide them so we can continue to provide that support and scale with them as they grow and scale their business. And we have this flexible engagement model for every stage of that growth. Early on, when people are just starting out, they just need a blueprint. So we can come in there get the QuickBooks set up, get the chart of accounts dialed so it works and so that it's scalable, and then provide some bookkeeping knowledge and support so that when tax season comes, these business owners are able to take this information and send it on over to their CPA. Now, with these controllers, we're able to provide some very advanced financial planning and analysis so you can cover all of these bases and really, really start to grow and focus on the other parts of your business other than, going through all of these transactional details. Next slide. The competitive advantage that we have is we are able to provide a CFO-level human being without that cost, and we can focus more on helping you understand what your economics are, what your job profitability is, and have that person come in there and really work with the business owners. Something just as simple as understanding unit economics or having accrual-based accounting or GAAP compliance accounting will allow these business owners to leverage and acquire outside capital to scale. It is really, really hard to grow a company without cash, and being able to leverage debt is a very, very smart way to do that. And it also allows these business owners to stay ahead in a very, very competitive marketplace. And honestly, my favorite part of this whole process is working with these creators and builders that have dedicated significant parts of their lives to build something special. And we can come in there and help them to actually enjoy that and enjoy the time away from work and give them some peace of mind knowing that they have an experienced, trusted partner that they can lean on to provide that level of support and peace of mind. Next slide, please. How to get started. So it's pretty simple. You can reach out to myself or any member of our team to schedule a free consultation so we can get a very high level understanding of your business and uncover if you need a controller or not. Like I sort of touched on earlier, not every business could use it, but we can help you figure that out. And once we get through that initial call, we can schedule an assessment that is just going to be a deeper dive into the accounting and then come back to you with a curated plan unique to your business that is scalable. So as your accounting gets optimized and the business grows, our level of support is designed to rise with you, providing ongoing guidance to navigate the challenges of running a business. Next slide. So why is this important? It all comes down to value. As financial partners, we would be awful advisors if we added an expense to our clients without providing an offsetting value for their money. And this is a terrifying slide, but I think it's a very important one. And the cold hard truth is that 82% of businesses fail due to poor cash flow. And this is 100% something that you can actively work to mitigate. And a controller is a secret weapon that you can use for that because they're able to take the financial information you already have and turn these into useful tools. Things like a 13-week cash flow forecast, which is just short-term rolling forecasts that shows exactly when cash dips might be coming, or provide variance analysis to compare actual cash activity versus the forecast. So if there is an issue that comes up, they can get flagged early and take this small little flame and prevent it from becoming an inferno where everyone in the organization is panicking. We're able to scenario what if modeling. So if a company experiences some sudden growth or can anticipate some delayed receivables or just want to see what can happen with some shipping charge adjustments, you can actually model that and run with your controller and say, what impact is this actually going to have on us? And also an often overlooked part of this is just educating the business leaders of the company so they can have clarity into the financial operations of their business for alignment and transparency. And my favorite part, and probably the favorite part of accountants everywhere, which is cost discipline, and that's just taking and separating these must-have investments from the nice-haves that could potentially choke some liquidity. Next slide, please. But don't really take it from me. These are just a couple testimonials that we have from our actual clients. One of them said, reviewing my P&L for the last year was a wake-up call for me. I know what I need to focus on in my business. And another one said, now I'm making decisions based on data and not my feelings. So those two people came to work with Out of the Box, and we provided this value for them, and it was literally eye-opening. You know, a lot of people just don't know what they don't know. And that's not to point fingers or to assign fault or blame. It's just to say, understanding where these shortcomings are can be really useful in getting the right people in place to provide that level of support to get these business owners and business leaders to the next level. And I'll go ahead and kick that over to Jeanette for some Q&A, and we can hopefully answer some questions for everybody.
Excellent. Thank you both. So while we wait for the Q&A box to fill up, I've got a couple questions for you here. What are some things that owners, operators could look for that might indicate they're ready for a controller, a fractional controller?
So if the business isn't as straightforward as it once was, you're having a lot more balance sheet accounts. Usually that's a big indicator that your business is ramping up. You've gotten loans, you've gotten investor funding, you're starting to acquire more assets, vehicles, or depending on what your business model is, anything that would facilitate getting more fixed assets. And so it's easy for that stuff to start to go off the rails. And so it's good to get ahead of it. And that's where we have tools that we put in place. We call them balance sheet reconciliations. It identifies movement in those accounts, making sure that what is in there is appropriate. And if there is amortization needed or depreciation, it really, I think it starts to become obvious to the business owner when instead of there being 4 balance sheet accounts, be it cash, AR, AP, and then ultimately your equity, now you start to really see some expansion on that. I think that's a really great indicator.
Yeah, I agree. And just complexity in general, like when businesses start to grow, they start to uncover different areas that they can sell into, or they need to start raising some money or prepare for capital events like exits or acquisitions. Having a controller that can take this information and create reports, audit ready reports, is huge. Deals fail every day because one of the organizations is just not audit ready, and the financiers are not going to take a gamble on that.
Excellent point. We've got a question here from Clay. He's asking, how do you suggest handling budgeting when you do not have the same customers every month?
So it could be tricky to answer. So it'd be a good way to understand, what does your pipeline look like? Sometimes your best move forward is to look at the past. I mean, budgeting is a guesstimate. And so hopefully there are some elements to it that you can rely on, like that Joe Smith comes back every quarter. And so you can build that in. But if there really is uncertainty and you're unsure how to compile your budget, typically you do start with sales and then move down into the expenses. And so that would probably be the approach we would start to take and get as close to realistic as possible. But budgets will always be a best guess. There's just no way around it.
An additional question, are there specific industries that your controllers have expertise in?
So I've been doing this for quite a few decades at this point, and there aren't many industries I haven't touched. And I think that's pretty safe to say for most of the controllers and Out of the Box. We tend to come into consulting for the opportunity to touch many, many different industries. And only myself. I've been doing this for 6 years, and it's opened up what I've been exposed to. And so for the most part, I think we'll be hard pressed to find a controller at out of the box that hasn't at least looked at and would have touched whatever industry you'd be bringing to the table.
Yeah, I agree. I think that's a really good benefit for working with out of the box is we have an entire team of people that span industries that we can tap into. So even in the event, if we have a controller that may not be a bona fide expert in one specific thing, there's a high likelihood that someone in our organization will be. So you have access to not just the controller that you partner with and hire, but you also have access to every controller and every finance person in our entire organization. So that's incredibly valuable, and it's something that you can't really leverage with single shingle solutions.
Excellent. Looks like that's all the questions we have in the queue at the moment. We'll give it a few more minutes before we close things down, but just wanted to thank our audience for attending. And thank you, Joe and Natalie, for sharing your expertise. If you have any questions after the fact or want to get started with one of our free consultations, you can feel free to email us at hello@outoftheboxtechnology.com. That inbox is monitored 24/7, so we will get back to you as quickly as possible. And we still don't have any questions in the queue. It's a quiet group today. So I'm going to thank everybody again for joining. Remind you that this recording and the slide deck will be shared with you later today. Just had another question come in. What does cash forecasting do for a business? Anybody want to tackle that?
Joe, do you want to take that one? I feel like
Yeah,
you've touched upon it on your slides. Maybe expand.
yeah, it gives you it gives you the ability to see into the future a little bit. Like when you do some cash forecasting, it gives you an idea of what your burn rate, which is, and a lot of other things, but your burn rate is how much cash you have on hand to handle your day-to-day operations until that cash runs out. So when you see what you have going with that, you'll be able to understand like, okay, we're doing well, everything's fine, or holy cow, this happened. We need to start to prepare for it, see what we can turn off, see what we can turn down, see what we can turn up, and if we do need to try and access some outside capital to meet our objectives.
Excellent. Another question. Do you help determine which KPIs a company should be using?
Yes. I want to be careful answering that one. This definitely will start to kind of move into a CFO swim lane. This is usually where the CEO and the CFO will get together and understand what has value and what are they trying to track. But controllers can absolutely assist there. And ultimately, the financial package that would be run on a monthly basis after month end has been completely closed and the financial package is generated, we'll usually have a KPI dashboard that will be formula driven. So all that data will pull in based on this last month's activity. And so, yes, I mean, we definitely assist in that area.
Yeah, and it's collaborative, there's a lot of this kind of we can discern by talking with the business owner and the business leaders and, working to engineer these, because not every business is the same, but so they may not want to measure the same stuff, but there's some common ones.
Excellent. And then just for my own edification, could you describe the difference between a CFO, a controller, and a bookkeeper, say? What are the different things that they may be trying to achieve and accomplish within the business?
Sure. So the CFO is really heavily focused on capital relationships and compliance. They're very mature controllers, essentially. They have the experience through trial and error and fire and everything else you can think of that's what makes them valuable. It's like you pay for the years for these people and the things that they've experienced. Controllers have a lot of those skill sets. They're just more focused on the FP&A. So they're the wizards that take all of this stuff and make it tangible and usable. And bookkeepers, they tend to execute the tasks and make sure everything stays on the rails, and they are so critical to those functions. But the CFO and controller gap is getting increasingly thin because controllers are becoming increasingly sophisticated in what they're able to do and what's being asked of them.
Excellent. We got another question. How much time is a fractional controller spending with or on a business each week, or is it monthly?
It's varied. It really depends on the business itself. What's the volume of transactions within the business? And so what's the complexity of those transactions? And so of the clients that I currently have, they're all very different. And it varies from week to week as well. And so depending on where we are within the monthly close cycle, it might start to taper off for a week or two, and then it picks back up again once the bookkeepers are handing off month end to myself. And then it's really the analysis starts and making sure that everything is ticked and tied and pulling out that data. And so there is no one solution. Everybody is different, and it's customized to your business after we've had conversations with you.
Excellent. Give it a few more minutes, see if any more questions come in. Looks like it's a little quiet. But thank you again, Joe and Natalie. Thank you again for those that attended. Again, if you have any questions, please feel free to reach out to us at the email on the slide here, hello@outoftheboxtechnology.com, or visit our website, outoftheboxtechnology.com, to learn more about our services. Thanks again, and we will follow up with you before the end of the day with the slides and the recording. All right.
Thank you.
Bye, everyone.
Bye.